Give a quick big picture look at how we are viewing crude right now. It has been in a severe, this is a daily chart by the way, it has been in a severe downtrend since it hit that high. If you'll recall, we were very short from not only the 54 area, but also on this bounce here to 52. And this continues to go lower, and 42.14 is this low right here that we saw back, again, election day. All these election day gaps are all being filled. It's interesting that, and at the same time, within a week or two. The bonds did this, you'll recall, they went up to 156.5, and if it can't close over there, it might be done. So this move down here might be running its course, but I want to show the long-term charts. February of 2016 was this low down here at 26.25. So now, if we can't hold this little tick here, but there's a couple things. Not only is this a low, but this is a gap that has been filled, but it's another reference point. That's being filled as we speak here at 42.36. And if we can't hang here by the close, then this comes into play down here at 39. So that's also a whole smaller area in the profile that you start to see. So when you pull back then on the timeline, on the different time frames, the hourly chart here very clearly the last 20 days has been just trending down. Every EIA is sold. There's one, there's one, there's one. That's 3 in a row. And I mean, that's almost for a month every EIA, and the EIA number today supposedly was positive. It was a bigger draw. So it's what those want, but right now the trend continues to be much lower. So I just want to point this out, that before you start trying to catch this thing, make sure you're careful trying to catch the knives here, because this thing easily could go down to, as I said, 39, and that would be an idea of what I see. 42.12 was low, and we already pointed that out. It's pretty much hit it today. I mean, if you look at today's chart, our low here was 42.29, so we're almost there. Now, if you're going to look for counter trend trades, just wait for kind of a shift in the momentum, which for me is not going to come intraday unless we're over, probably 43, and then you have all this above you. So this gets to be a pretty tricky area to trade counter trend trades, because you've got all these people now that are trapped from this morning that were long. They're down $1. They'd be happy to get back just for small losses. So that's usually what happens, and really, so that's why we always start with the longer time frames and then break them down from there. So most people, even if they're day traders, don't look at the long-term charts, and this is why this is key, and this is why even on these event days you have to know these levels, because the reason why we broke through there at 43.77 is that was really where we ticked this morning, and we ticked to that number right there at 43.71, and then we rolled over again. So you wouldn't see that even unless you were looking back more than a month. So that little move there was a test of that was hit this morning, and it's really hard to see unless you even let me pull back to an hourly and you can see that. But it's going to be longer probably than most people are used to looking. See, here it is right here, and this was May 4th, and we hit that. Basically, we were on that number 43.71 right when the EIA came out. They rolled up really quick, and then they hung around there at about 43.20, 43.40 for about an hour and a half, 2 hours, and then they finally broke through. The sellers won out. But you can see, I said the last 3 EIAs have been lower. Well, here's 1, 2, and 3. The bigger move, or the bigger sellers happened the first day. There was less here, and there's less even today. So at some point, this thing will be, a turnaround. But we're down now, $10 from the high just less than 3 weeks ago. So that's a significant 20% move. Oil, I've said, is in a bear market. It's going to go back to the 20s. It's just a matter of when, not if. The demand's just not there, and this is the part of the equation that is left out by the people at OPEC, just like the demand part of the equation is left out by the people at FOMC. So without demand, price isn't going to go up. And right now, there's no demand in oil. There's no reason. It's being used less and consumed less. So keep that in mind. That's a big picture top-down look at oil. Be careful. again, you're getting into that zone, 42.30 here, right where it needs to hold pretty much at 42.